Hello and welcome to Questioning the Manager. This week we have Alex Crook, Fund Manager of the Bankers Investment Trust. This is a global equity portfolio aiming for income and growth and invests in every major market across the world. Alex, welcome to Questioning the Manager. So let's start with asset allocation. Where are you with your UK weighting?
So the UK, I think UK stocks you can divide into two pools to some extent. So one is the big global names that are listed in the UK but really do a lot of their business internationally. And then there's the domestically focused businesses that, yes, are listed in London, but they do most of their business in the UK. And I think if we look in sort of last year and into 2017, we stopped selling UK names because I felt the economy was in a good position and the investment markets had over discounted worries about Brexit. But as we move into 2017, there are some challenges for domestically focused companies. Wages are not rising strongly, but the cost of goods, whether it's food or petrol, is rising. And I expect that will have a squeeze on consumer spending. So I think over the next 6 months, we'll probably selectively be reducing UK names a little bit, but we'll keep those international champions, which we still like in our portfolio.
So it seems as we're a little bit further on in the cycle in terms of economically across the globe, more and more central banks are becoming more hawkish and seeming to want to raise rates. So how does this affect your investment approach?
Well, there's comment of that. To me, it's really only the US that I see being hawkish and starting to, well, have raised rates, but raising rates further. I still feel through 2017, the ECB in Europe and Japan will still be very accommodating to investment markets, keeping rates low to drive growth and hopefully some inflation. So I think it's, again, looking at your US exposure, making sure you have the right stocks in that rising rate environment, reducing high yield bond proxies, looking for more quality cyclicals and value stocks, and in Europe and Asia, continuing to follow a relatively growth theme, try to take advantage of easy money conditions. So I think we're splitting our emphasis, our exposures in that way between the US and international.
Okay, let's look to the China sleeve of the portfolio. It's performed very strongly. So my question is why, and does the level of debt in China concern you at all?
So in Bankers, the Chinese sleeve is very focused towards domestic companies. So the level of debt is more of a concern, I think, nationally and in the banking sector. We have relatively little exposure to that area. What we're trying to take advantage of is increasing spending by consumers and their ability to have spare cash at the end of the month and buy better products and improve their spending. And I think we're nicely focused for that within the Bankers China sleeve. So that's the important dynamic there.
Okay, finally, Alex, let's look to some of your stocks. You've been buying autos. What is it that attracts you here?
I think there's three things from the investment autos. First of all, it's right across the board. We own auto companies, but also the suppliers for parts into cars. And I think that allows us not necessarily to get the right, the car company that's selling the most models, as long as the bits that go into them, we're getting those technologies right. And we've got a very strong focus towards electric vehicles and increasing amounts of complex electrical kits and components in cars. And I think that's a very clear trend moving forward. But to us also, I think the sector is cheap, so it's good value, good yields, low valuations, but also I don't think we're at peak sales yet. And again, the reason it's a cheap sector is the market saying sales will roll over. We see in Europe in particular and in Asia as well that sales can increase from this point of view. And down the road, we see more electric cars phasing out of diesels. And again, that should extend the cycle to be a much longer one. So we see great opportunities in that sector for an unloved and cheap opportunity to buy shares.
Alex Crook, thank you.
Thank you very much.